Traders say activities at the Nigerian fixed income market has been mixed, with initial bullish sentiments prior to the announcement of Thursday's OMO auction. Emmanuel Mordi, currency trader at UBA, now joins me from the banking hall to review this week's trade at Nigeria's fixed income and forex market. Emmanuel, glad to have you on the show this afternoon.
Thank you very much.
So talk us through the trends that impacted activities within Nigeria's fixed income space this week.
Okay. Early this week, we witnessed some mixed sentiment in the fixed income market. Though it was a short week, starting from Tuesday to Friday, we initially witnessed initial bullish trend in the fixed income market prior to the announcement of OMO auction on Tuesday. And upon the announcement, market was quiet, and of which, after the result, we saw short, medium to long tenor bills go from 13 to 13.03 to 12.9% respectively. So it was more of bullish initially, but as yields began to fall, some market participants took advantage of the low yields, and we saw some profit take. So it was more of a mixed sentiment, bullish initially, but ended up being bearish. Up until yesterday, we saw, owing to FX retail refunds and OMO maturity of 42 billion, market was a little bit awash with liquidity, and we saw more buying pressures across the board.
Emmanuel, what drove yields down such a way that it impacted investor sentiments and drove market sentiments from bullish, like you said, to bearish towards the end of what I call a short trading week? Emmanuel, are you able to hear me? I was asking you, you said earlier the market had mixed sentiment, started on a bullish trend, and then went down to bearish sentiments, impacted largely by the going down of yields. And I was asking you, what drove the yields down? Okay,
what made it go down was owing to market pressure. There was OMO maturity yesterday, which was Thursday, so funds came in yesterday. There was also retail refund, FX retail refund. So that kind of brought some fresh liquidity into the system, and we saw some buying pressures across some maturities in the TVS market.
So would you say investors are more interested in what duration of tenor now? Are we looking at short-dated tenors or the long-dated tenors? Where are investors looking to?
No, as earlier said, buying pressure was for the medium term to long term, especially the October to January maturities. So the sales we saw, the selling pressure we saw was for the shorter term, of which people were actually selling to create liquidity to buy for the longer tenor and medium tenor bills.
And how has the FX market fared this week?
Okay, for the FX market, we've seen some relative stability in the FX market. If we look at the CBN official window, which was at 306.90 across throughout this week, coupled with the I&E that has been stable around 360.60 levels, and the parallel market, which is also known as the BDC market, which has been trading between 357 to 359 on the bid offer rate. So we've seen some relative stability in the FX market across the board. And reports that there were some reports that CBN has actually, there has been some inflow of $35 billion from inception of I&E. So that has also helped to create some stability in the FX market. So we've seen more stability in the FX market owing to from the inception of the I&E window.
Emmanuel, there have been talks recently in the news on the need to change Nigeria's multiple exchange rate. Have you been getting feelers on this, say, from investors?
We could recall that there used to be multiple exchange rates, like at least three exchange rates before. We used to have like the NIFEX, we used to have the I&E, and we used to have the FX. But IMF were concerned about the multiple exchange rate because to them they did not see any convergence. But sometime last year, there was an announcement that the NIFEX rates will no longer be used, and now we only have the CBN window and the NIFEX, which tends to be at 306.90 and 360 level, of which if you compare it to the BDC rates, which is at 360, you tend to see some convergence between the INA window and the BDC rates. So convergence has actually come to stay between the BDC and the INA, coupled with the fact that the NIFEX rate has been scrapped.
Emmanuel, help us understand clearly. There have been analysts who have said to me that they have actually noticed indeed a convergence between the official markets and the unofficial rates. Is this true? Is this an accurate reflection of what you are seeing in reality?
Yes. As stated earlier, the INE is at 360-60s level compared to the BDC, which is at 357, 350, 359. So there has been some convergence. If you compare it to where we're coming from, where the BDC rate 2 years ago used to be at 357 and the INE at 400 levels. So there used to be a wider margin of 400 and 500 for the BDC and the INE compared to the present levels we have now of 359, 360, 361 levels. So convergence has come to stay. And
so what's your view on
more convergence going forward?
What's your view on FX rates in the near term?
FX based on CBN objective of maintaining price stability, we will continue to see FX being stable in our market. The group brands going up to 73 has been helping us if we continue to maintain our production level at 2 million barrels per day. So that will kind of show up our reserve, which will be used to fight or preserve our exchange rates.
Emmanuel, in light of the current system liquidity, what's your interest rate outlook in the near term?
Okay, in the near term, because of OCSMI's provisioning for next week, we will tend to see OBB on overnight shoot up to about 20-25%, as is usually the case. If you compare that to how the interbank market was played this week, OBB opened this week at 9 and 10%, and it spiked up to 17 to 18%. This was owing to provisioning for OMO and then the board auction. So, but on Thursday, we saw some retracement in the rate, and we saw rates go as low as 6 and 7% respectively for the OBB and overnight. This was attributed to the OMO maturity and retail FX refund. But for next week, owing to OCSMI's provisioning, we tend to see rates go, OBB and overnight, go up at the start of next week.
Emmanuel, many thanks to you for your time on the show. Emmanuel Mordi is a currency trader at UBA.